So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decide if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family, so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So let's discuss Aurora Cannabis. So they increased by around about 100% within the last days, and the cannabis industry could be benefit from a federal point of view. So yeah, that is why there's a big hype for Aurora stocks. So and that is why I would like to discuss this stock and to give you an idea about the high growth investing strategy that I will use to give you an overall idea and an overall picture of the Aurora Cannabis stock. So let's stick around and discuss the first KPI within the high growth investing strategy. It is the enterprise value divided by the sales actual, and the enterprise value is a measure of the value of a company regardless of its financing. And if you divided the enterprise value by sales, you get an important ratio for estimating an valuation of a fast growing but still a loss-making technology company. So that is also the case for Aurora Cannabis. So yeah, and if we take a look, we end up at 6.92, as you can see, 3 points. So as we are below 8, so that's quite a good indicator that yeah, there's an that we are talking about in fast growing, but yeah, in this case still loss-making technology company. The next one, the cross margin. The cross margin is the percentage of sales that remains with the company after deducting the direct costs. And if you let's say use the sales and reduce it by the direct cost and divided it by the sales, you get minus around about 55% for Aurora. So unfortunately 0 points, as we are far below 50%. So yeah, and what does it mean? I mean, the cross margin provides us a good indicator or an indication of the profitability of a business model, and the higher the percentage of the cross margin, the more money a company has available for sales, marketing, research, also development, new products, and doing other stuff. So the rule of 40 score. So the rule of 40 is a simply key figure for assessing the efficiency of a company and its growth and the quality of its business model. The ratio is calculated as the sum of the sales growth rate and the free cash flow margin. And the higher the value, the better the business model is of the company. And value above 40 are considered as attractive. And in case of Aurora, we are talking about minus 229% roundabout. So we are far below 40%, and that is why we didn't get any point. Number 4, the sales growth. Yeah, as I mentioned, yeah, as you can see, 11%. Unfortunately as well, 0 points, as we are below 20%. The next one is the debit ratio, related by dividing the sum of the current and non-current liabilities by equity, and we use the last quarterly figures. And yeah, as if we are less than 1, it indicates low debit, while a ratio greater than 2 indicates high potential risk in terms of debit. Here for Aurora we have 0.25, quite a nice value. We receive 3 points as we are below 0.5. That's nice. Our second 3 points, so in total 6 points currently. And the PEG, it's one of the most important key figures for the assessment of an already profitable growth stock. So it calculates the ratio of the PE and the profit growth. And if the ratio is between 0 and 1, as Peter Lunch also mentioned in his formula of a fair value of a stock, it indicates that we are talking about an undervaluation. And yeah, in this case we can't calculate the PEG trailing 12 months due to the fact that we have currently a negative EPS. Overall we received 6 points out of 18. So the big question is, what is the fair price? Estimation for the EPS 2020 is minus 0.8, so still a negative EPS. If we take a look into Yahoo Finance and other internet sites, we see that the current EPS estimation for 2021 is minus 0.44. So if we compare the current fiscal year 2020 with 2021, we could assume an profit growth of round about 45%, roundabout. And if we take a look into Yahoo Finance in the summary dashboard, we see an EPS trailing 12 months of 0.22. Today they will also give us the latest quarterly figures. So it is very interesting, because if we will receive the momentum and get into an positive EPS, then we could definitely calculate a fair price by Peter Lunch. So the fair price is calculated by the EPS multiplied by the profit growth, by the estimated. So if we would assume that next year, for example, the current estimation is wrong, and we would have a total and overall EPS of 0.2, then we would talk about a profit growth, if we compare it to a negative profit growth of minus 0.8, definitely over 100% profit growth. And if we would multiply it by 0.2, we pendling into an area of between $10 and $20. So this could be a fair value in terms of a positive EPS of, let's say, $10 or 20. And yeah, so put Aurora still on the watching list. From my point of view, there will be at least a consolidation within the next weeks. It's also very exciting to get the final figures, the quarterly figures from Aurora. And after that, yeah, I will keep you updated on this interesting stock. Yeah, and I hope you enjoyed the session here. Please feel free to hit the subscribe button below and become part of the Monkey Stock Club family, and you will never miss a video again. And yeah, it would help me to increase the community here, and to keep you still updated, and to yeah, searching for new investment opportunities. Take care and goodbye.